I'm going to go ahead and get started here. The first thing I kind of want to do is just quickly go through. I sent back quite a lot of feedback on people's starting points, and I'm going to just address some of the more common ones. Hopefully I gave you back enough feedback to correct it, but sometimes it's better to talk through these things instead of trying to read and ask other questions, etc. So if you have some questions, those of you that are here, please get your hand in the air or yell at me or throw something at me or whatever. So just coming down quickly, real estate, land, and buildings. There weren't too many of you that had that. And the thing about that is if you're buying a land and buildings, there has to be a division there. Okay, the government won't let you put it all, for example, on the buildings because land truly doesn't depreciate, right? It's difficult to say that land would depreciate. There's some very rare exceptions to that, but it gets more complicated than what we need to go over here. So, okay, there is no magic number. I don't know what to tell folks in terms of how much goes to the land and how much goes to the buildings. There's no magic number there. If there's vacant lots in the area that are selling, that gives a person an idea what the land is worth then. But absent that, you just got to kind of guess. You know, the old 20-80 rule might not be a bad rule. 20% on land, 80% on the buildings. But it really depends, right? If you're in New York City and you got a skyscraper that's a million miles into the air, obviously the building's probably going to be worth 99% of the value or more. So most of us aren't doing projects in New York City. If you're like me, you don't even want to visit New York City. Been there once. Leasehold improvements, not too many folks had those, and the ones that did, it looked like they did that correctly. Equipment, same thing. Y'all had equipment there for the most part, but I think most people did a pretty good job. A lot of people had an itemized list, and I really appreciate that on a separate sheet. The one thing that, and probably on this line item that came into play more than anything, a few of you still were getting some numbers in there that had numbers beyond the decimal, and that screws up this down here. Screws up this "you are fully funded," even though it said you might have zero funding needed. This was in red and not in green, and so you got to go back and get the numbers after the decimals. You got to round everything off to a whole number. Folks, for the most part, rent, deposits, supplies a little bit. Some folks had some things in supplies that I thought maybe belonged otherwise, maybe inventory and/or equipment. So supplies are those things that you run out of, you use them up, and you have to replace them periodically. Okay, if it's equipment, it's something that you're going to keep and use for quite a while. I don't know, the poor example I thought of, I go to a place and they do gift wrapping, say around Christmas time. Well, the machine that holds the paper, because they got big rolls of gift wrapping paper, the apparatus that holds that would be equipment. The paper itself would be supplies. Okay, even though the apparatus probably doesn't cost all that much, it's not that expensive, it would still be considered equipment, whereas the wrapping paper would be considered a supply in that case. Inventory is something that you sell, you mark up and sell to the customer. So even if you buy it in bulk maybe, and you're gonna change it or whatever, it still would be considered inventory. Again, a poor example, and I don't think anybody in here has a bar, but if you're a bar, you buy bottles of booze, right? And you typically would not sell the full bottle to a customer, okay? But it's still inventory, right? Because you're going to sell fractions of that bottle to the customers in terms of drinks and whatnot. So you'd still count all that as inventory and not as a supply. Supply would be other things like wipes, paper towels. Are there some gray areas there? Absolutely. If you're running a coffee shop, are your coffee cups, the disposable ones that you give to the customers, is that a part of your inventory? Is that a part of your supplies? Frankly, too, when you get to a certain point in terms of tax-wise and whatnot, it doesn't matter. In either event, they are a tax-deductible item, and so in a sense, it doesn't matter whether you're counting those as inventory or supplies. But some things are a little more meaningful. So, advertising and promotions is probably a big one. A lot of people I'd say virtually everybody underestimated what they're going to need for advertising. And I know a lot of you talk a lot about using social media and whatnot, and that's very true. But there's still a lot of things that you're going to do in advertising that you're just not imagining yet, promotions and advertising. It might be lettering on the side of your truck, your service truck, okay? It might be business cards that you need. It might be pamphlets that you need that you're going to hand out to customers. It might be menus that you're going to, if you get a restaurant, menus that you're going to print up and send home with customers. Okay, there's a lot of things, and believe me too, the minute you open your doors, the Glee Club from North Star High School is going to be knocking on your door saying, would you like to put an ad in our annual? Okay, you're going to do some of that. Okay, that may not be in the startup. I get that, and that's fine. Okay, but be thinking about that. You'll be amazed. Most people very much underestimate what it's going to take for advertising and promotions. But even on the startup, there's things. If you're going to have a building, you might have a sign out front, even if it's just a banner. Okay, you might hang a banner at the daycare. This is Randy's daycare, or whatever it's going to be called, right? Okay, and so think a little bit more thoroughly about that and get the right kind of numbers in there. Licenses, I didn't see a lot of problems with that. Other initial startup costs, pretty good. Some folks put some in there. Some I thought maybe went a little overboard, but that's fine. That's a little bit of a catch-all, and that's fine. A lot of people did not have anything for working capital. Okay, you must have something for working capital. Okay, absolutely, positively. If I ever sent an application back in banking, and we did SBA guaranteed loans a little differently back then, but we'd send them in to get approved. If I sent one in that didn't have working capital or insufficient working capital, it always got sent back and we had to redo it every single time. Okay, period. And so what's sufficient? SBA would usually say you want about 6 months worth of operating expenses. Well, we haven't done our operating expenses yet, but I'm going to talk about those today. But you make an estimate, right? And then we can always come back and change that if we need to. Okay? But there's got to be a number in there. And, you guys could probably do in your head, if you looked at the operating expense thing, click on that really quick, you might be able to do in your head and get a rough idea what some of those might be, right? Okay, back to that. Most folks did this down here pretty good. I'm not going to spend a lot of time on that because most folks did that pretty well. I mean, I might argue that there's probably no way you'd have that much equity. I think one person I complained a little bit. I thought they had not enough equity. Okay, probably not a loan that would get approved loans that would get approved if you went in. I think that person had less than 10% equity, and that's most bankers are really going to frown on that. Okay, and SBA and other places. You can get away with, maybe less than 20% sometimes, but usually it's in that neighborhood. So, okay, questions about that starting point? Just want to backtrack a little bit on that and cover some of the things. We've gone over payroll, we've gone over sales forecast, and we've gone over the additional inputs. I should have probably gone over this earlier, and I didn't, the operating expenses. This is one case where I'll let you change some of these white cells if you want to, because none of these would have formulas, they're just labels. And so you may have some expenses that aren't showing up on here in your particular business. And so if you need to change one of the labels over here, take an expense that you don't have and just change the label to what you might have. Not many of you are going to have contract labor, so that's fine. So if you wanted to change that to something else, that's perfectly fine. Okay. As you think about your advertising, again, think about what I just said. Generally speaking, it's the most underestimated cost that people have when they submit applications for loans. Okay. And a lot of it's what I just told you. You're going to open up your doors, and the Havre High School pep band's going to be in because they want you to buy an ad for their program or the band or whatever it might be. Okay, and you're going to write out a $25 check because you got a 14-year-old kid, in there, and it's your niece's, or something, right? Okay, it's going to happen. Trust me. But these are pretty good. They got a pretty good list of the expenses here. Okay, they've got a pretty good list, and so you can go down that, and a lot of this, your rent's going to be pretty set, right? Okay, your advertising, you may be seasonal. If you're a little bit seasonal, Seth, you might be a little bit seasonal, right? So you may want to start advertising a month or two before the season and carry it on for the first month or two. And then it might be lower, the rest of the year. Okay. And you may have other expenses. Lots of you may have other expenses that are like that are a little bit seasonal. Okay. And that's fine. You can change it. If it's going to be the same, let's take, for example, rent, just one trick, because let's say I had a $500 a month rent. Not everybody knows Excel perfectly, but when you get 500 in there and you got to flip out of the box and then come back to it, you can see this little square that's in the bottom. If I want to drag that or copy that to other cells, when I get that cross to show up as a black cross like that, I can just left click and hold it, and I can drag it, and it'll do it for the rest of the months. Okay. Just a little hint to make some things a little bit easier. Go down these. Your insurance, here's one that may be a little bit goofy, because remember on your startup you had something called prepaid insurance. And most insurance companies would require that you pay your insurance probably a full year ahead of time. Okay, so you're going to get your liability insurance and your casualty insurance, property and casualty insurance a full year ahead of time. And let's just say it was $1,200. Okay. On another form, on your cash flow, it's actually going to amortize that. I'm sorry, not on your cash flow. On a depreciation and amortization schedule that's in the back that we actually don't do anything with. But it's going to amortize that out over the year. Okay, you're not going to have to start paying that, okay, $100 a month starting in that first year. What you probably will do is have another $1,200 that you're going to spend here in the last month. Does that make sense? Okay. Yeah, that's the way that kind of works. Another one that might be a little bit goofy might be rent or lease. If you're assuming that your rental is going to charge first month's last month's rent plus a deposit, okay, you've paid your first month. So let's start in the second month then. Okay. Does that make sense? Supplies we have, travels, meals, and entertainment. You may not, and like I said, there may well be some on here that you're not going to have. Legal and professional service as well. Are you going to pay an accountant to do your, to do your taxes, do your payrolls quarterly, or payroll reports? You got to do payroll monthly, right? You got to do maybe more than monthly, okay? And you may pay somebody to do that, okay? Believe me, it's a pain in the butt, okay? But if it's more of an annual thing, that you need to go in once a year and just have your taxes done, you may not actually have that in the first year. That may be something that'll show up then in years 2 and 3. That's fine. Okay. Utilities, they may be very seasonal, but you could also say that I'm going to put it on the budget billing. Have the same amount every month. That's appropriate. Nothing wrong with that. Office expense, a lot of people don't, in the past I've seen a lot of them turn that in and they don't have anything for office expense. And almost everybody's going to have some office expense. You're going to send out some invoices, you're going to need a little paper, you're periodically going to have to replace the ink cartridge in your printer, okay? You're just going to have a few things like that. You may have to go buy the little pads if you're going to write things out by hand, etc. You're going to need receipts and those types of things. Okay. Yeah, it depends on the business, but yeah, in your case, for what you're looking at, probably. Okay. So think about that. For some of you, it may be very low. I mean, it may be $20 a month, and if you want to just put it in like $60 every quarter, that's fine too. Okay. You can see the rest of this down here, it's going to do all that for you, or it has already done all that for you, right, with the interest and whatnot. These are white cells that you don't want to be messing with down here. Okay, please don't change any of those. So really you just got this upper orange to do. And think it through. Think about expenses that you're truly going to have. Don't really overestimate either, but but don't underestimate so much. Okay, when you get to the years 2 and 3, you may make some changes here. Okay, these are gold, so they can be changed, right? Don't change the yellow ones. Kind of go down and think about it and say, well, let's see, if I rent a place, for $500 a month and maybe I sign a 3-year lease, is my rent going to increase 3% next year? Okay, so I'm going to have to change this to 0. And if I got a 3-year lease, I'm going to change that to 0. Okay, so you can play with these a little bit. They've kind of got 3% in here. That's kind of a close to an inflation rate. Our inflation rate's actually a little lower than that. It's 2%. Okay. If there's some things you think that might go up higher, wages are on a separate sheet, so let's not worry about those. But some things you think might go up higher, then for sure you could change it and have it go higher too. Okay. So these gold ones you can change. For the most part, you may not. I don't know why they got a couple of them at 5%. Licenses and repairs and maintenance, they put in at 5%. Commissions and fees. Most of you won't have any commissions or fees probably. So, if it's 0, it doesn't matter if you change this then. Okay, that makes the expenses done. You're pretty good there, right? Let's flop ahead to the cash flow. If you look on the cash flow, there's only 4 rows of orange. Okay. Dividends paid you won't use. Okay. You will not use dividends paid unless, again, you're a Schedule C corporation. And I haven't seen anybody that's told me they want to be a Schedule C corporation, and you probably would not want to be a Schedule C corporation. So you won't. So now we got just 3 lines that we have to worry about on the cash flow, but worry about them we should a little bit. Okay. Additional inventory. For the most part, this program assumes that you're just going to keep replacing your inventory on a pretty regular basis, and it kind of actually automatically calculates that for you. And so it's not a huge deal. And I wouldn't expect most people to have something here that they would increase monthly, but you could. Wiley, if you think your business is going to grow pretty regular every monthly, maybe you want to put in a $100 a month increase in inventory. And I don't know what your normal inventory is. Okay, that'd be okay. Folks that are seasonal might be a little different. You might add a bunch of inventory at the start, a month before the start of your season, whatever that may be. Okay, but it wouldn't surprise me in a lot of cases if a lot of you had nothing in here. That's fine. Okay. Owner's distribution, on the other hand, everybody, mark this down, everybody's got to have some owner's distribution. This is where, remember I said you can't be an employee? Okay, you cannot be an employee of your company, and so you're going to pay yourself here in this owner's distribution. How much are you going to pay yourself? That's up to you. Okay. We would oftentimes get SBA loan apps sent back to us because people didn't put enough money in here, and the SBA would say this person cannot live on that, and so it's impractical, and so we're going to turn this down because there's no way that somebody could run a business and live off that. Okay, sometimes we'd send it back in and say, well, this person's husband or wife is a doctor and makes $250,000 a year, and so they don't need to live off that. Okay, and that was usually satisfactory. Other times we'd have to, if this was truly what they were going to rely on, we might have to change this. Okay, change some of our other estimates and whatnot. Okay, so this one I fully expect. The other thing about this one is that this continues on, as does the inventory. I just flipped over to years 2 and 3. It continues on there. Make sure that you continue your owner's distribution on there. Okay. If you want that to be a relatively equal amount all 3 years, I don't have any problems with that. If you want to start at $250 a month and kind of constantly grow it, I don't have any problems with that either. Okay. Line of credit repayments, the answer to this one is it depends. This program kind of figures if you're going to have some cash flow deficiencies in certain months, it's going to calculate that for you. and it's going to automatically then project that you need a line of credit. That's not unusual, especially for a starting business. It's not unusual for seasonal businesses. Think farms and ranches. Okay, they get lines of credit. Our bank, banks in this area wouldn't make any money if it wasn't for farms and ranchers needing lines of credit, right? Operating lines. Okay, so what you want to do here is when you get everything else done, you come and you look, and if you're getting a line of credit balance down here, okay, the thing about it is it won't pay itself off. It'll advance you the money, but it won't pay itself off. And so you might, let's say your typical business, maybe the first 3 or 4 months, you're building a line of credit balance, but in month 5, it quit building, and by month 8 or 9, you're actually getting an ending cash balance that's kind of decent. You probably want to pay down or pay off this line of credit. So let's say my line of credit balance is, here, I'll put a number in here just for the sake of it. I don't know if I can. Yeah, it'll screw things up if I do that, because I won't be showing any income. But let's say my line of credit balance here in month 4 is $2,000, and by the 6th month I've got $1,500, making these small numbers, but I got $1,500 in my account. I might want to pay back $500 of that line of credit, okay, because I don't want to keep paying the interest on it. I got to pay interest on that line of credit. And maybe the next month I've still got a $1,500 cash balance. Maybe it's up to $2,500. Maybe I want to pay back $1,000. I just have to enter that amount in here, okay, in this line of credit repayment. So I might enter $500 there, and I might enter $1,000 here. Okay. Well, then this month, it's an oddball number because it got advanced the way my projections and stuff worked out. It's an oddball number, and so I look, and I still have a line of credit balance of $642. If I enter $642 there, it would pay it off. Okay. Don't make a line of credit payment. I've had some folks do this in the past. They've made line of credit payments when they didn't have a line of credit. That really screws things up. So you end up with a negative loan, and just the program's not set up to have that. So just like I did here, technically I'm paying off a line of credit that I don't have, and it'll just goof things up. So don't do that, okay? Same thing, you got to look at years 2 and 3 because, again, especially if you're seasonal, you might pay off your line of credit at the start of the next year. You end up getting a line of credit again, and okay, so you got to take a look at years 2 and 3, and this, this one extends out, right? So make an observation of that. Okay, see how it's doing. If you're really building if you're paying yourself $500 a month and you're building up a hell of a cash balance, I'm probably going to send you a note and say, why don't you pay yourself a little more? Okay, that's why you're in business to begin with, right? Okay. Look at this, joy, oh joy. Then you get to the income statement. You guys see any orange or gold boxes, cells on there? Not a one. Okay, so guess how much you have to do on the income statement? Nothing. Years 2 and 3. Are there any gold or orange on there? No. Or gold, yeah. Orange, yeah. Nothing. Okay. On the other hand, when we get to the balance sheet, and even though it's all white, you're going to have a couple things go wrong, and you're not going to show that you balanced, and it's kind of odd, and I'll tell you what's going to happen, and I'll tell you how to fix it now real quickly. Okay, the reason it's happened is because I had to change the amortization period from 3 years to 1 year. Amortization period from 3 years to 1 year. And this form here still assumes that amortization period is over 3 years. And so what's going to happen when you get all done is you're probably going to have some balances that show up here in years 2 and 3. Okay, for sure you'll have it in year 1, but that's okay. We expect that in year 1. But you're going to have some balances show up here in years 2 and 3. And if you go down, if you look at those balances, they're going to be exactly how much you're off down here. Okay, And so what you're going to have to do is come up here to years 2 and 3. It may be in just prepaid expenses, or in just other initial costs, or it may be in all of those. Okay, all you got to do is delete those numbers then, and then you should balance. Okay. A couple of other reports that are on here, they're kind of cool. You may want to take a look at your break-even analysis, because it's something you're probably going to want to write about. You might have some questions about that. That's fine. Financial ratios can be kind of cool to look at. Okay, and it's kind of cool, you know. Okay, Wiley, you know, you're going to have an inventory turnover rate. What's a normal inventory turnover rate for a coffee shop? Don't know, do you? No. Yeah, you might be able to find out though and see how yours matches up, right? Okay, so these things are kind of cool back here. Give you some things to look at, and they might help when you do your write-up for the financials. The cost of goods calculator, mainly for manufacturing. I don't think any. The amortization and depreciation, every now and then this gets goofed up a little bit, but I'll notice that, and we'll figure out how to fix it if that happens for somebody. And this is not something you typically spend a lot of time looking at, but you sure should look at it and kind of understand it. Okay, have I gone over all the worksheets? I think so. You guys think any others? Okay, I'll stop talking. I'll come around and take a look, and especially at the starting points, because I've reviewed everybody's that submitted those, and I want to check and make sure that we're, you know, if I left you some feedback, that you know what it was and that we can get it corrected and get moved on.